Every headline on Friday said Roblox missed. But its revenue grew 36%. The stock still had its worst day ever, down 27%. So if the revenue grew, then what actually broke? Quick disclosure, I don't own Roblox. Nothing to sell you. I read about it on Saturday because the headlines did not add up. Sometimes a company knowingly weakens one number to help another. Deciding whether that's smart or an excuse is the actual job. Let's start with the myth. Revenue was $1.5 billion, up 36%. Not a miss, but the number that matters is bookings. The cash users load onto the platform to spend. Revenue is recognized slowly after. Bookings tell you what's happening right now. Bookings rose 8%. 3 quarters ago, they grew 70%. 70% to 8% in just 9 months. Then the line which nobody headlined. Daily users 152 million, then 144 million, then 132 million, and now 123 million. 3 straight quarters down, 29 million fewer than the peak. Management says that's still up 10% on the year. Agreed, but inside the year, it only kept falling. Usage hours went from 40 billion hours to 29 billion. Now let's try to understand the why. Here is where management wants credit. They say they caused this on purpose. They rewrote the algorithm that picks which games you see. The old one pushed viral hits and hits monetize brilliantly. The new one pushes evergreen games it thinks you will play for years. Roblox gets retention, but far less money per hour. They tightened the age checks too. The under 13s got hit the hardest. Here is my view, and it's narrower than the headline. That trade is real and deliberate. And it might be right. Platforms trade a bad year for a bad decade all the time. But it explains one lever. It doesn't by itself explain bookings rate of change decreasing from plus 70% to just plus 8%, or the guidance they gave next. So the fair question is not, did they do it on purpose? It is whether this was a calculated trade or strategy used to explain a slowdown they didn't fully see coming. Either way, Wall Street doesn't grade this strategy, it repriced the risk. Let me argue against myself. In the same quarter, the finances did improve. Net loss narrowed to $185 million. Adjusted profit $152 million against $18 million a year ago. Free cash flow $294 million, up 66%. Fewer users but more cash for this quarter. But here's why it fell 27%, not 7%. It wasn't about the quarter, it was the guide. Next quarter's bookings are guided down 14% to 18%, about $120 million below what analysts expected. Revenue can still tick up since it books deferred spending from stronger quarters, but the fresh money is going backwards. And free cash flow is guided between minus $60 million and plus $5 million against a $443 million a year ago. Cash generation to roughly zero. Then they dropped the full year outlook, pulling forward an already planned switch to quarterly only guidance right when the numbers got the hardest to forecast. So what would change my mind? Two things. One, engagement has to recover. But Roblox itself expects users to rise next quarter. So a flat graph proves nothing. That is the low bar they set. Users or hours falling again would break their story. 2. The part people skip. Rising users don't provide the bet. Bookings have to hit the high end of the guide and spend per user has to stop falling. Users coming back but each spending less is a stickier platform and a weaker business. I'm not buying here, not because 123 million users are dying, but because management stopped guiding the full year exactly when it got hard. I don't underwrite what management won't. Follow for more breakdowns that read the deck, not just the headlines.